Hi, everyone. This is JW. I'm a CPA working as a financial and tax consultant to support small business owners and individuals to achieve their financial goal. I provide various services to my clients, such as tax preparation, tax planning, financial consulting, payroll services, and bookkeeping services. In addition, I also teach accounting related courses to graduate students at a local private university. I love teaching and sharing what I know. That is why I created these videos to help you gain some basic understanding of tax. In the United States, understanding taxable income is a crucial aspect of financial responsibility. Taxable income is the basis for calculating your income tax, which supports various government services and programs. We'll explore what taxable income is and the different types of income that are subject to taxations. So, what exactly is taxable income? Taxable income is the portion of your total income that is subject to taxation by the federal and the state governments. It includes various types of earnings we'll discuss in the following slides one by one. First, let's learn about earned income. Earned income includes salaries, wages, tips, and bonuses from your job. It's the money you receive in exchange for your labor or services. Salary and wages are a form of compensation that employer pays to employee in exchange for the work or services performed. But what is the difference between salary and wage? Salary is fixed and predetermined amount of money paid to employee on a regular basis, often monthly or biweekly or semi-monthly. For example, John is a salary employee. He earns $60,000 per year. So if you divide $60,000 per 12 months, he is making $5,000 per month. Salary employee may not be eligible for overtime pay. In contrast, wages are typically paid on hourly basis. Employees receive a set rate for each hour they work. The income for wage earner can vary from pay period to pay period, depending on the number of hours they worked. Wage earner may be eligible for overtime pay when they work more hours than a certain number of hours in a week. For example, John works at Walmart as a cashier and he earns $15 per hour. He is supposed to work 20 hours per week. If one week he works over 20 hours in a week, he will be paid for overtime. Bonuses. Bonuses are additional financial incentive or rewards that are provided to the individual or employees in addition to their regular pay or compensations. Bonuses are typically given to acknowledge and reward specific achievement, performance, and contributions. There's so many different type of bonuses, such as performance bonuses, sign-in bonuses, year-end bonuses, retention bonuses, profit sharing bonuses, and referral bonuses. Tips. Tips are voluntary payment or gratuities given to service worker by customer, in addition to the base price for the service or product. Remember that one day you go to a restaurant having a nice meal. At the end of the meal, you are given a copy of receipt asking you to offer some tips to the servers. Employees who receive tips are required to report them to their employer. Tips can include cash tips, credit card tips, and tips added to the bill by the customer. It is essential for employees to maintain accurate records of their tips. So all these earnings will be reported on your W-2 form and is typically subject to both federal and state income tax. Here's a sample of W-2 form. On this form, your employer's information will be provided: their name, their address, their federal tax ID number, and also your information, the wage information, salary information will be provided to you as well. The total wages you have earned and also federal income tax withheld. and also the Social Security tax and Medicare tax that has been withheld by your employer on your W-2 form. There are different types of investment income, such as interest from saving accounts, dividends from stocks, and capital gains from selling investment, like real estate or stocks. These are reported on various forms, like a 1099 INT, 1099 DIV, and Schedule D for capital gains. So start with the 1099 INT. This form is to report the amount of interest income you earned as taxpayer for the year. So this is a sample of 1099 INT. The payer's information will be listed on the top portion with their address, name, tax ID, and also your information will be listed as well. And then interest income will be provided to the IRS and also taxpayer on the right part of the form. 1099 DIV is to report dividend income made to investors and shareholders by corporation, mutual funds, etc. Here is a sample form for 1099 DIV. 1099B. 1099B is to report details of various investment transactions. Look at this sample form from Robinhood Security. This form combines a different type of investment income, such as if you look at the green number 3, here this section is 1099 DIV. If you look at green number 4, it is 1099 miscellaneous. If you move down to the bottom section, this section lists all the security transactions. Notice there's a long term and there's a short term. They are different, and the tax rate will be different for those different type of transactions. Now let's talk about rental income. Rental income from property you own is also subject to taxation. This includes the money you receive from tenants for the use of your real estate property. Rental income is reported on the Schedule E. In addition to reporting rental income, taxpayer needs to report rental expenses such as HOA fees, repair and maintenance, mortgage interest, property tax, and depreciations. I always suggest clients to use a spreadsheet to record income and expenses on a monthly basis because trust me, you will forget. If one month you have a specific big repair expenses, if you don't record it right away, you will forget it. So by keeping all this record properly and timely, this will make your tax filing a smooth process in the following year. If you own a business, your business income is also considered taxable. This includes the profits from your sole proprietorship, partnership, LLC, or corporations. Business income is reported on various forms depending on your business structure. We'll have more discussions on the types of business income in the next few videos. It's important to note that not all income is taxed at the same rate. Different tax rates might be applied to different type of income. And in addition, the government provides various deductions and tax credits that can reduce your taxable income. For example, deductions like mortgage interest, student loan interest, and contributions to retirement account can lower your taxable income. Additionally, tax credits like education credit, child tax credit, and earned income tax credit can directly reduce your tax liabilities. You can always message me if you have any tax-related questions or what you are interested in knowing about taxes. I will put this information together and share with you.